Welcome to Classic Value Investors. My name is Mariusz Konieczny, and today with me I have Robert Bugbee, President of Scorpio Tankers. Robert, thank you very much for joining me.
Thank you, Marius. It's a pleasure.
Robert, it's been about a month since we talked, and when it comes to shipping, that's like 10 years in regular life. Uh, Lots of things changed. So I know you guys had a press release this morning, and I want to get to it. But before we do this, can you just kind of bring us up to date? What happened since last time we talked? How things changed?
Yeah, absolutely. Well, the good news is the world is opening up a bit, and we have every reason to feel more confident going forward in the fundamentals. In that one of the greatest risks that we were having in this and worries that we had, 5 weeks ago when we spoke was that we would have a depression in the world's economy, which is much tougher to handle. And instead, what we're getting actually is quite a rapid recovery in the demand for the headline demand for products. In the short term, of course, that's resulting in a destocking of vessels. The vessels that were on storage are being sent back, but that's happening at such a rapid speed. So, for example, five weeks ago, there were around about 480 million barrels of products on the water, and the average is around 400, 410, and that's already reduced down to 450 million barrels. So the good news is that is happening very fast, which means that if we continue on that descent, the destocking will be over by, certainly by the beginning of the fourth quarter, which will nicely coincide with what is normally our seasonally strong quarter, and that the period where the market will have weaker rates may just be confined to, the next 2 or 3 months. And we've managed to get a good start to the third quarter. We did a number of time charters, and that's really what is the announcement of the booked cargoes today. And those rates are significantly above what we would normally expect in a third quarter. I mean, all those classes are booked around 50-60% higher than what the company even had its third quarter in 2019. They're positive in cash, so it looks as if the period of potential weakness that we would have to bridge could be pretty short.
Okay, well, that's interesting because, as you know, Q4 was very good. Q1 was fantastic. Q2 is looking to be very good, and people were petrified to invest in these names because they were afraid of the rate cliff. And so the way I understand it is that you you seem to be saying that the rate cliff is not as big as it seemed. Um, the destocking is happening faster, which means that the recovery in rates will probably be here quicker than we originally thought. Am I reading it right?
Yeah, I think you're going to go into last time we talked, we had a very high spot rate in the front, and it was real backwardated for the forward 6-7 months, and everybody was saying, fine, the rates are high, but it's a long way down to the bottom, and we could have a real sustained period of destocking, which would result in negative rates. Well, now already the shipping curve itself is in a V. The shipping curve is the next 2-3 months are going to be weaker spot rates, but already as you start to move to the back quarter of the year, the freight futures are moving higher into winter, and I think it becomes a very different prospect. And we've seen this in the dry cargo market that the moment these rates start to turn positive from negative, the stocks move higher, and everybody then looks forward to thinking, wow, we can now see through this into the recovery and look at the fundamentals. And the fundamentals are that the order books are at record lows, and the world economy with all this stimulus is likely to grow, quite a lot, for in 21 and 22. And I think this is the first time that we're right on, whatever you want to call it, the crossroads, the division, the changing of the tides between the market saying and even ourselves going, oh my God, will rates fall? How long will they fall for? Will it be a slow destocking? Will headline demand actually pick up? And now 5-6 weeks later, we are seeing a rapid destocking. And as a result of very fast increased, strong overhead demand that is, that is nothing. Because if the pain is going to be short and sharp, companies like ourselves have earned so much money over in the fourth quarter last year, first quarter, and now you can see in our guidance that Scorpio Tankers would have made, and still is making considerable cash flow, that those companies will have the resources to easily get through to the other side and get through to what we would see as a very strong cyclical recovery for many years after that.
Do the analysts and maybe institutional investors, or the conversations that you might be having with institutional investors, are they seeing that tide turning and then the freight curve changing, or is it something that just the insiders are aware of?
No, I think this is the irony. Even the most bearish analysts who have been focused on the short term and even have sell recommendations, if you read their reports carefully and you look past what they're saying in the present, even they are talking about the fourth quarter being stronger. And one of the analysts who recently downgraded the company to a sell, literally has Sting as being profitable in the fourth quarter and moving upwards. So the analysts see that, but the market is so caught in the price of the present at this point. If you look at the analysts or the notes and things, the people are caught in that price. Stocks go down. Why are they going down? Rates are going down. Oh my God! We have to keep things in the present with that. The investors, though, are very different. I mean, there's been a noticeable pickup in the last, I would say 2.5, 3 weeks. As the good economic news has come out across the world, whether it's China, the U.S., we've seen the price of oil strengthen. We've seen, people generally becoming more, optimistic in the use of energy. We have seen a quiet but very, very steady increase in what I would call long-only value, big funds getting interested in the stock and literally seeing through through the present into that future that's starting to look quicker and brighter. And I think they've been using these opportunities to, or rather, I know they've been using this opportunity in the last 2.5 weeks to start to build or add to positions. And
You're
these people were absent, quite absent in the in the heydays when the stocks when the rates were very, very strong. It's a,
Yeah, interesting. The rates that you published this morning, um, how do the rates for Q2 compare to Q1 and Q4, just for the people that are not necessarily following this on a daily basis?
uh, we published Q2 together alongside the rates for Q3. They are. I don't think that's. I would never compare. I'm sorry to. I don't sort of mean to avoid the question, because the information is fairly easy to get. But I think it would add to some confusion. I think a fairer comparison would be to compare it to a normal third quarter. So the third quarter is, as I said, seasonally the weakest quarter. It's held between summer driving in the northern hemisphere and winter use of heating oils. And last year, for example, the Scorpio Tankers stock was significantly higher than where it was. The third quarter set up a much stronger fourth quarter, and during that fourth quarter, the stock more or less went to double where it is right now. And the third quarter rates that the company made in the LR2s, then we made $15,900 a day. The LR1s $13,100. The MRs $13,000, and the Handys $10,000. Well, we've just said today that the LR2s are, what we booked so far is around $29,000, and the Handys are around $15,000. Now, even if the rates are coming, from now on, we book some of the third quarter or all of the third quarter at less than what we're publishing now, there is an extremely good chance that the third quarter this year will come to be around where the third quarter was last year, or even slightly better. And worst case, it was only going to be $1,000 or $2,000 a day less. So that's really the reference point. That's the importance of what we've published this morning, is that as third quarters go, it doesn't look as if it's going to, be a disaster, even though the destocking that's going on is tremendous. It is really, really rapid. So if we can get through this next 2 or 3 months, and as I said, that pain is pretty short, then that's what's exciting at the moment.
I don't believe I ever saw Scorpio Tankers do such an update the way you did this morning. What was the rationale? What was the reason behind you doing it?
Well, we said on our last conference call that, or our first quarter conference call, that we were going to. We felt that there was tremendous volatility in the markets. That we understood that COVID-19 was different, and we said that we would, quote, we said then, in a short time we will come out and give a separate disclosure and details on, the bookings that we have for the third quarter in the time charters, which really is what this third quarter update is, and an update on the second quarter. because we felt that the period, the 3-month period between earnings in an environment like this was just too long to, keep our investors or potential investors guessing on what was actually going on in the company. So we took the unusual step to just provide a little bit more information. Many, shareholders had requested, requested that we were a little bit more forthcoming. So we felt that it was the right thing to do.
Okay. You were talking about how the demand is picking up very fast, and that's, having an effect on destocking. During the worst period of the demand, we saw headlines that demand was down to as much as 70, uh, as
Yeah,
much as 30%, right? Or where
yeah.
the before the crisis it was what 100 million barrels per day, and then it dropped to like 70. Now, where is the demand now, according to your sources that you follow?
We don't know exactly, where it is right now, and we wouldn't, right now want to. We don't know, people aren't coming forward with that, but it's very clear with the, very clear with this rapid destocking that's going on, combined with, the firming in the oil price, that um, headline demand is much stronger than obviously where it was in May, and common sense would indicate that we're we're people are driving, people are starting in various places to fly. I think what's more important to us is going to be what is going to be the expected inventory level going forward that's required. So we, as I said, think that at this rate, by early in the fourth quarter, you're going to have come back to pre-COVID levels of inventories if we continue this rate of destocking. The question is do we get even luckier? Do we get where people sit in sovereign countries or big commercial companies say to themselves, well, there hasn't actually been much investment in crude oil production. That's being hit. So maybe in the future there'll be a squeeze. There'll be a squeeze on actual crude oil production, combined with at the same time, a increase in demand as the world really recovers and gets stimulated that way. So there could be either a scarcity of oil or bidding up on oil. So we will hold our inventories higher, commercial and sovereign, higher than what we had prior to COVID-19. That obviously would be a great benefit, because that means that the inventory destocking would finish much quicker than if they drag them down all the way to the level of pre-19. And the second thing is whether or not we get back into a contango curve that is beneficial to storage. So they sit there and say, well, actually, we're not going to redeliver all the vessels that are in storage. Those two things would be pluses. So what I'm giving you now is like what we're seeing is whatever is the worst case. We're making an assumption that you're just going to draw down all the way to pre-COVID-19 levels.
Interesting. And when you're talking about destocking, can you just a little bit talk about it in terms of how the destocking could be the same or different for the crude versus the product side, and how the destocking is, affecting maybe the rates for different tanker
I think,
types?
yeah, I think they're different at the moment on different sizes. So fairly similar so far between, let's say, crude and product. But the bigger the vessel, the 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 less that they are, the more they've still got storage. I mean, if you can remember the last time we talked, that there was two types. There's the what I would call the dysfunctional part of storage, where you had lots of product tanker ships or smaller crude ships like Aframaxes caught in storage because of logistical reasons. Well, the ports in the world are starting to, daily function better than they had 5 years ago, and that's a daily improvement. So the first to go and the first to be returned are let's say the smaller vessels of each size category, and the later ones to go are the bigger sizes. So you can see in crude oil, the better performing vessel at the moment is the VLCC in relative terms, and in products, the better performing vessel is the LR2.
Okay. With all the cash flow that the company is generating, um, does your capital allocation strategy changed over this time, or
No,
what are you doing with the cash flow that you're generating?
nothing. We're either using the cash to. I mean, we did a small change. We bought back a baby bond for $50 million and issued a baby bond for 25. So the net pure debt we reduced by 25. The gross debt we reduced by 25 million. But what we're doing is we're obviously paying down credit lines that could be withdrawn again or keeping cash. That's simply a function of us just not wanting to take anything for granted. As I said, we're seeing all of this improvement. It's really optimistic. That demand is just simply reflecting everything else we're seeing in the world economy opening up. But obviously, there's another side to it that says, will it come back will COVID-19 come back in the winter? Will we ever get a vaccine? So until we have a proper resolution of the situation, or at least sight of that, just sight would help. We're remaining cautious and keeping the liquidity that we're generating.
Okay, so you're improving your balance sheet. You're keeping your cash in the bank just in case you need it. But let's say going forward, Q3 is not as bad as people think. And then in Q4 we start seeing improvement, and we do get some kind of permanent resolution to the COVID situation. I would assume, and correct me if I'm wrong, that such big cash flow buildup in one way or another it would be returned to shareholders.
Well, I think the first thing you can assume is that there would be, you would start to say to yourself, wow, we certainly don't have to be, as defensive now. And then you're going to weigh up whether or not you'd use that increase in liquidity to create permanent value to shareholders by maybe refinancing expensive debt. You would have to weigh up whether or not then which of the securities and instruments would be the better to buy. It's not as simple. I wouldn't want to be flippant and say, well, of course, you could buy loads of stock or you could buy loads of your converts back, because the difficulty in this is in that calculation is that my expectation is the second that tanker rates move up again, the stock would start reflecting that and would move out rapidly. Rapidly it would do that. you already seen in a matter of 10 days, you've seen, some of the Cape size owners or and the more leveraged plays in dry bulk move up, 50, 60% in 10 days.
It's
There's no reason to think they won't double in the next, go up another 50% in the next 10 days. So the question is, would be, yeah, you'll go and stick your toe in. The question is how successful you would be in doing that.
it's interesting that you say this because I got a text today, uh, someone saying that when the rates were high, no one cared. The stocks didn't move up.
Hmm.
Why would anyone care now if the rates go up? Obviously, I know the answer to this question, but can you address it?
Because the simplest answer is because the next move will be the rates will go up.
Well, okay. Uh,
Yeah, I mean because no one cared when the rates went up were high because people were so caught, as I explained earlier, in price, so they were terrified that the rates would fall. So when everyone is saying, well, they're not going to last forever, but they're fantastic rates, and the industry curve is backwardated, people said, well, why do I want to invest if everybody is telling me the rates are going to fall and people are uncertain about what liquidity they need to keep and companies aren't willing to do buybacks. Well, the flip side of that, ironically, is that just like you've seen in dry bulk, um, people will buy the moment they see the rates improving, and they don't just buy the rates. The stocks scream up from the other side. I mean that's happened countless times in the shipping markets over the last 30 years because suddenly everyone knows the same answer, the same as I'm openly saying to you. Wow, we immediately go if the rates start strengthening in the fourth quarter. As we think they will, we immediately go from being defensive to offensive in our thinking.
yeah. Okay.
Well,
Thank you for that explanation.
yeah,
Okay. I don't have any more questions. I think it was a great update on the market and
appreciate it.
your company. Anything else you want to add?
I just hope that the world holds together and that we continue to pull out of this COVID-19 and as I said before, I've been quite consistent. We're much happier in a world where there's economic success and safety than benefiting short term in storage from a world that's in massive distress and potentially on the way for a depression. So, I'm looking forward to our next update, and hopefully that'll be, some point in the third quarter when hopefully we're even further through this destocking and on the way to, beginning, a multi-year cyclical recovery. So I'd look forward to you giving us the pleasure of being interviewed again, perhaps after our next earnings.
Okay. Fantastic. Thank you, Robert, for your time, and have a good rest of the day and have a good weekend.
Thank you very much.